vast part of his customer base, how is he asking for a massive pay raise? And I think the answer is, like I said, investors think this is a bet on the future. It's not necessarily about cars, it's about Optimus, it's about self-driving cars, it's about Tesla as this massive robotics thing. Yes.
But Tranche 11 and Tranche 12 directly relate to Musk's participation, right, in a succession plan. Just going back to all of that, Bloomberg's managed traffic here for weeks. We'll be going through this compensation proposal. Thank you very much. There's another side to it and another story. A lot of the momentum behind a shareholder resolution for Tesla to potentially invest in XAI came as one of those that led the charge, lobbying others in recent months, is Alexandra Metz, aka Tesla Boomer Mama on X. Metz is a prominent figure in that group of retail investors who backed Tesla and Musk, a long-time Tesla investor and shareholder, and joins us now. So it's included a shareholder-initiated proposal for Tesla to invest in XAI. Your reaction, please.
Great, very happy. Obviously, we have worked on that for a while now. It all started last year when another retail shareholder, Gaudi, asked Elon whether that is possible. At that point, obviously, XAI's valuation was much lower. Elon had then responded that he would ask the board. He came back a couple of quarters later saying this needs a shareholder vote, and then shareholders asked for a proposal to be included.
And you'll get to vote in November. Alexandra, why is it important that you have skin in the game with XAI? What is the future as you see it? Because according to this pay package, it is still 20 million cars on the road. It is still FSD.
Oh, it is still cars. It is still FSD. That is Tesla's bread and butter. But every Tesla now, and Ed knows because he drives one, already has Grok in the car. And Grok is the XAI product, the large language model that is used, derived from X, former Twitter communications and conversations, and the strongest, in my view, large language model there.
Alexandra, I did use FSD on the way to work this morning. I used Grok during the journey. The skeptic say XAI cash. It is a company facing massive rivalry with OpenAI and Anthropic. It can't stand on its own 2 feet. This would be Tesla bailing out XAI. How do you feel about that?
Not at all. I mean, honestly, we had recent reports from Elon saying that XAI doesn't need any current cash. The question is obviously at what price, and the shareholder proposal, the way it is proposed, does kick it back a little bit to the board to find the right valuation. Because when we lobbied for this shareholder inclusion, we kept it very generic. There is a clear definition, and I think the board has clearly said they don't want to have the responsibility of the basic decision. They are not recommending either for or against it. It's just shareholders deciding by themselves whether they want XAI or not. In my view, I think it will be a fantastic financial investment. I also see the synergies between XAI and Tesla just growing with the bots even more. But it is coming down to real shareholder democracy, shareholders deciding whether this investment has to be done or not.
Last time.
All right, so we're going to try a couple of different things here. So we're on Facebook. We have no viewers.
And at that time, the judge
Not good. 13 minutes in, no viewers. I don't like that. YouTube, I don't have any yet.
What do you make of this current pay package proposal in that respect?
And then, experience now. Okay.
That judgment, if it stands in appeal, and we will know in a couple of months, there's an October 15th hearing, and then we'll probably know by January, February whether it stands or not. But if that judgment stands, Tesla has, in this current proxy, now also a shareholder vote on whether they want to have a plan B in place for the 2018 package to be fulfilled. So if that plan B becomes necessary because Delaware's courts don't understand what our shareholder interest is, so if that happens, it will actually cost us billions and billions more, probably 50 to 60 billion more than in 2018. So I don't see how that's going in any favor to us shareholders. The package will do plan A or plan B. And the question is, will we get it the cheap way, the 2018 way, or will we have to pay 60 billion more because the judge ruled against us?
And eventually, maybe $1 trillion if you hit an $8.5 trillion market capitalization and then some.
All right, 5 minutes here, nothing. Here, nothing.
Coming up, we'll talk to a guy positioned to be the Silicon Valley candidate for California governor, tech founder, Ethan Alvarez.
All right, so enhance. Let's say enhance for live, device camera, live studio, no, voice chat, live, create, effects. No, no. Enhance flip service. All right. We got people? No people. No people. We need people. I don't like not having people.
Build an app that tells you an avocado is ripe. It's a beautiful time to follow.
So we have about me.
Help them come to life. Hire Fiverr experts to build and market your app.
Make your dog a quattro dog.
All right.
Credelio Quattro offers the broadest parasite protection of its kind.
What do we have here? We have messages.
Heartworm disease and 3 intestinal worms, including tapeworms, in a single monthly chewable tablet. Use with caution in dogs with history of seizures.
You know what? Let's see.
Ask for Credelio Quattro and make your dog a quattro dog. Data threats don't knock, they sneak in quietly and make themselves right at home. But when you partner with a global leader in data resilience, you can spot threats before they're a threat to your business. Just call us the global leader in CSOS. Exactly. With Feed, it's all good.
Sure.
Skin irritation sound like a nightmare, but since I switched
Sure.
to Tedx sensitive care overnight pad, sleep brings me joy.
Showing
Its skin
tonight
comfort formula helps set the barrier to help protect my skin.
6. Can you
Doritos Golden Sriracha. Spicy. But not too spicy. Break with Pure Leaf. Powered by
All right. So nobody there. Nobody there. Let's talk real estate.
Time for a tea break. Time for Pure Leaf.
Bringing you
Live.
economic news
Got it.
whenever and wherever you find us. I'm Francina Fonseca, Portugal, and this is Bloomberg.
All right. Let's see who we get.
President Trump
Something went wrong. Try again
to the White
later.
House yesterday
Ah,
to discuss
I know.
AI. And the dinner, CEOs reiterated their pledges to invest hundreds of billions in the United States, while Trump said chip makers that didn't build in the United States would face substantial tariffs. Just take a listen.
Chips and semiconductors, and we'll be putting tariffs on companies that aren't coming in. And we'll be putting a tariff very shortly, probably a hearing. We'll be putting a fairly substantial tariff on, not that high, but fairly substantial tariff, with the understanding that if they come into the country, if they are coming in, building, planning to come in, there will not be a tariff.
We continue with technology and politics. Startup founder Ethan Agarwal is aiming to position himself as the Silicon Valley candidate in a run for California governor. The two-time startup founder has raised money from VC firms like Henry Stevens in the past. Now he's looking to win votes with his tech-forward campaign pitches. Ethan Agarwal joins us now. This is early in a cycle, it seems. There will be a crowded field of many political heavyweights, likely others from the technology industry. What chances do you really have of being governor of California?
There's a lot of other candidates that are running. mostly from Southern California, most of whom are politicians. My view is if you are generally happy with the way things are going in California, you have lots of other options. If you are looking for a systematic reset and a complete change, I present a different opportunity.
A different opportunity that leads into maybe crypto, being an ability to pay your taxes. You're leading into DMV apps, for example. But at the same time, a lot of our team can't get into work today because the bar is down. So I'm interested as to what the infrastructure perspective is here.
Yeah, hey Caroline, good to see you. I mean, look, first and foremost, I trust Californians, which is something that has been lost. Our politicians love telling us what to do. Infrastructure is a key part of the platform. What was happening is Californians, like people come here, and I was just talking, people come here because they want to live a great life, they want to enjoy the weather, they want to build something for their family, and that stopped happening because jobs aren't available here. You guys saw the jobs report this morning. Companies are leaving the state, we're over-regulated, you can't build a house, you can't do anything without the government trying to get a piece of it or trying to tell you what to do. That's what politicians love to do. What we need is someone who understands that Californians themselves can be trusted, who actually likes Californians, and who actually wants them to realize their potential. California is a state of massive potential, and we're just not realizing it because of all this regulation.
That some of the policies that are on your platform, because I think that was Caroline's question. What is the proposal you have to fix infrastructure like bars, to fix housing, jobs creation in Silicon Valley, etc.?
Yeah, it starts in with CEQA. CEQA is the California Environmental Quality Act. It was passed in the 70s when Reagan was governor, and it initially had some good ideas, but it's been leveraged and extorted to all hell at this point, where anybody can sue anybody to stop.
Hey, what's up? What's up?
And that's why you don't see modular
What's up, Sammy?
happening in San Francisco. That's
It's
why
called
you don't
real
see
estate.
construction happening in housing in LA. That's why there was a water treatment facility in Huntington Beach that was making 50 million gallons of drinkable water. It got stopped by CEQA. There's 600,000 people that live up in Mendocino that are getting a PG&E. PG&E's plant is getting shut down. They're not going to have access to reliable power because the salmon and the eel are going to have trouble. I mean, these are just ridiculous things that are happening in California.
No viewers. Craziness.
Should actually live well.
Sorry, I'm teaming you as well. I'm going to jump in. You're basically saying I want to deregulate.
Yes.
Very similar to what the Trump administration is proposing across a number of industries.
Yeah, I don't think this is a Democratic or Republican issue. I think this is just common sense. Like, the reason California is losing 500,000 people is because the regulation is driving jobs out. It's that simple. Like, other states like Arizona, they beg companies to come to their states to create jobs. California does everything it can to kick companies out. Masa-san announced that he's investing $1 trillion in data centers. All of that money is going to Arizona. Why is it not coming to California? Whatever you think of Elon, I mean, we just talked about his pay package. Whatever you think of the guy, Tesla is based in California. They moved to Texas and they're creating 22,000 jobs in Gigafactory there. Why are those jobs not in California? Are we shocked that people are leaving? Of course not, because there's no jobs here. It's really that simple.
In terms of policy and how you work with an administration that perhaps the current governor is very much on TikTok, actively working against, I'm interested as to what you think the relationship with Silicon Valley and whether you think that it's a voting base that will get behind you. Because boy, are they pro the administration, some of them at the moment in field, and you're running on a Democratic ticket.
I am running as a Democrat. 34% of California voted for Trump. So the notion that California is a deep blue state is not true. We're not 95-5 or 90-10. We need to understand
why don't we
that
do
the
this?
state
Let's
is
create
shifting. And again,
6
I don't
to
think
7.
people, they're frustrated with what they're seeing. So look, my view is, if you want to vote for somebody who's going to kind of keep things the same, there's a lot of smart candidates, just Katie Porter, Antonio Villaraigosa, et cetera, who are doing a good job in SoCal. But if you are actually frustrated with what's happening and you think the state can realize its potential better, that's where you come to me, where you want a little less regulation, a little less government all over your back.
We are, of course, going to be inviting you alongside other candidates to be joining us as the race heats up for California Governor Ethan Alvarez. We appreciate your time today. Stay well. Meanwhile, coming up, Qualcomm CEO Cristiano Amon joining us to discuss the chip-decided partnership with BMW, deepening that relationship as it aims to improve self-driving capabilities. This is Tedx Talk.
Forward.
Automakers value your safety. When they find a safety defect, they issue a safety recall and cover the repair costs, no matter the age of your vehicle.
Hey, Rafi. Talking real estate. Let's go. A lot of information I can give. Any questions you have, let me know. You want to hop on, I can have you join. So if you can hear me, just say you can hear me. That'd be great. If you could, thank you.
Will that be regular, 3D, or 5D Premium Ultra? With TD Early Pay, you get your paycheck up to 2 business days early.
Make them ultra.
So the next 2 hours.
Can you hear me? Can you hear me? Huh, huh, huh.
That's how TD makes payday unexpectedly human.
If you can hear me, type that you can hear me.
Qualcomm is steering deeper into the auto industry, teaming up with BMW to debut its new Snapdragon Ride Pilot. It's an automated driving platform designed for safety and driver assistance. The system is just being rolled out in the all-new BMW iX3. Let's bring in Qualcomm CEO Cristiano Amon for more. You call it a revolutionary driver assistance.
You know what? So if I go here, I want to share this.
Look,
So how do I share it? So let's go to Reddit.
Focus on safety, and it's different for a number of reasons. I think the first one is one of the things.
Do you have any questions? Type them in. Do you want to hop on? We can go together. We can do this together.
So when you talk about assisted driving and autonomy, you need to put server class computing power in those cars, and with Qualcomm technology, there's no compromise. You have all the computing power, but you still have efficiency of power consumption. You can get incredible range. The second thing is it's scalable. It goes into every tier car, so we're super excited about it.
Cristiano, I've been studying Snapdragon Ride Pilot, the SoC architecture, the software piece. This is highly analogous with the camera-based system that Tesla has, right? With FSD. You just talked about it being scalable for that reason. Did you benchmark against that?
So two different important parts. First, the architecture is scalable.
I'm gonna post. Hey man, if you can hear me, just say I can hear you. Just type it in. I want to say hi to you. What's up, Rafi?
Navigation on autopilot, urban environment and highway environments. That means it can scale to entry-level ADAS systems and entry-level cars, all the way to the full capabilities. The other thing is, has been certified now in 60 countries, and it's launching, and a lot of people will be able to see the performance. Actually, we're super excited for people to see how it performs. And one thing that is great about this, we've done this for BMW, but it's available for the entire industry. Every OEM will be able to use it, and BMW and Qualcomm, we want that. And people will be able to see it, compare, and I think that's a great opportunity.
You know, my question was one of sort of an academic one, because it's the argument of a camera-based only system from an economic standpoint versus also including LiDAR and radar. But you were super focused on the compute, not just performance, but energy usage of the compute. Could you talk a little bit about how you engineered it to that level?
Yes. I think Qualcomm DNA, and it's about efficient computing, because we design all of our chips so there's a battery on the other side. It's not plugged to the wall. So I think you have the benefit of a lot of the Qualcomm energy efficiency compute, and you have the ability to get a lot of the computing power required in an architecture that actually is incredibly efficient from a thermal management and from power management. The second thing, to fully answer your prior question, is you do have the capability to navigate on autopilot in urban and highway environments, even if you have complex sensors of cameras and radars.
Cristiano, push us forward, because your real focus on auto has been one of diversification of Qualcomm more broadly. Of course, the auto sector has its trials and tribulations. How much is this going to drive growth for you, for the business in the longer term?
Caroline, that's a great question. Remember, we talked about our pipeline of $45 billion in automotive, which is kind of translating into revenue. We see quarter after quarter record revenue for Qualcomm, especially because it's not about moving with the size of the market, it's moving into share as new cars are launched. With our technology, the pipeline is converting. And I look at this stack that we're launching on the Snapdragon Ride Pilot with BMW, is we look at that as an opportunity for expansion. In the 45 billion pipeline, 1/3 of that is ADAS, but it is included, of course, the BMW project.
All right, so your post must contain post flare.
Cristiano, last night the president hosted a number of technology leaders
Discussion.
at the White House. I believe you're invited, but unable to
Ed.
attend.
Post.
And his message is very simple. Tariffs are coming specific to chips. Those that
Rafi, you can hear me, Rafi?
How is Qualcomm thinking about that? You know, a lot of emphasis gets put on TSMC in Arizona, but is that like big enough to serve all of you?
Yes, it's unfortunate that we couldn't attend. We sent a representative, but we had a big party in San Diego at the stadium for the 40th anniversary of Qualcomm. And to your question, well, look, we're excited about that. Remember, we're a fabless company, so we need a.
Hey, so, you know, what I'm doing here is I'm just working and I'm going to be answering your questions. So, you know, ask me any questions and I would love to answer them.
And for Qualcomm, this is, I think, great news. We want diversification of manufacturing, we want more capacity in America, and we have said.
Is that an option, Cristiano?
Not an option today. I think we would like Intel to be an option. They have been talking about moving to the next process technology, which they call it the one that comes after 18A.
You know, let's say share, let's copy.
Efficient power consumption. I think we just had this whole conversation on the car. So
Maybe you can't. I don't know.
ready for us will be an option. Right now, our suppliers really TSMC and Samsung.
Qualcomm CEO Cristiano Amon. It's great to have you back on Bloomberg Tech. Thank you very much.
That's the YouTube live link.
Bloomberg Tech. Ed, what a week.
Yeah, huge headlines. 1 trillion comp package for Elon Musk. We have months.
Might not allow it.
Don't forget, check out the podcast. You know where to find it on Bloomberg Terminal and online on Apple, Spotify, and iHeart. A short week, but a big week from New York City and San Francisco. This is Bloomberg Tech.
Yeah, this stinks. And that. And
That tells if an avocado is ripe.
Rafi, what do you do? Where do you live?
It's a beautiful time to fall in love with your ideas. Help them come to life. Hire Fiverr experts to build and market your app.
Ryan Miller fixes his hair. Doesn't know why he picked such an ugly shirt, but knows he can do more with his money. Ryan opens his fidelity app, sees his opportunity, and takes it.
Going to end, ending that.
It's a good shirt. It's like flowers, but also a cow. Not sure that helps.
Start investing with no account minimums. Talk about easier investing.
We're cancer and blood specialists. Our mission is simple: deliver high quality and exceptional comprehensive care to our patients, from our front desk staff to our nurses to our doctors who work tirelessly to find a cure. You cannot duplicate what we do anywhere else. Providing access to cutting-edge imaging, state-of-the-art therapies, over 50 clinical trials, and an on-site pharmacy. Patients have what they need when they need it, closer to home. Your cancer and blood specialists, conquering cancer together.
Dear first place, experts agree Toyota value can't be beat. Drivers agree Toyota quality rides long and strong. Add hybrid choices like no other, and you'll win the long game.
Of course.
Country mile. Toyota. Toyota is KBB's best resale value brand 5 years in a row. Find yours at Toyota. Let's go places.
I'm Guy Fieri. I'm asking for your help in supporting the Tunnel to Towers Foundation as it continues to pay off the mortgages for fallen first responders and Gold Star families who have died in the line of duty and left behind young children. Not only that, but they are also
Just golden sriracha. Spicy, but not too spicy.
Oh, I think it's crooked.
It's called style.
There won't be any special shortcuts on this team. Take a page out of my playbook and get some window world windows. Pronto. They look great, perform better, and are priced right.
Wow, double hung, casement, custom. Any style I'm looking for, Window World has it covered.
Right? Because life looks better through a window world window. Now let's turn this transformer into a TV.
From New York City for our viewers worldwide, I'm Summer Lewis. Let's really help this search right now. Coming up, U.S. payroll tumble and stop added to the economy. Traders are now locking September.
Raffy, that.
Another weak summer employment report.
This is a continued deceleration. There's an ongoing sort of labor market slowdown.
We want a labor market that's cooled it. That's not freezing. This will stay good.
We are expecting the Fed to cut rates.
You don't think they have to do much more?
There's a lot of uncertainty, but there's a lot of complacency, I think, in the bond market.
This is not a bond market which is not functioning. It's a bond market that's repricing.
Government bonds are going to have a less important role to play in portfolios as diversifiers looking ahead.
Where we're looking at the yield curve is you're probably going to see a further steepening.
Bond investors are a little concerned about putting on too much of a steepener trade.
I'm not overly concerned on this run up, Amy. The market to me feels like it's overpricing cuts between now and the end of next year.
The market's already pricing in the cuts.
Everyone is assuming that the Fed is moving to a place of easing.
If the Fed doesn't cut, that probably sets up a little bit of a pullback here.
All right, all the commentary on the job number. Let's take a closer look at those payrolls number because it was an eye-popping miss on the headline number. 22,000 jobs added versus a consensus estimate of 75,000. Now, after you fold in revisions for the last 2 months, we are looking at a loss of 21,000 jobs from previously reported numbers. As for the unemployment rate, that ticks higher to 4.3%, which is in line with what economists have been looking for. Average hourly earnings also stabilizes, gaining 0.3% in August. That's what we got in July as well. And average hourly earnings actually coming in a little bit lighter than what people had anticipated, or I should say 3.7% versus the estimate of 3.8%. Let's flip the charts and take a look at the 2-year yield over the course of this holiday shortened week. We did start the week higher, but since Wednesday, you could see a steady decline, and then, of course, capped by a plunge today. At one point, the 2-year yield falling as much as 12 basis points. Now the lowest since 2022, and everyone we talked to seems to like the short end, so I wonder to what extent that feels like a very crowded trade. Let's stay on the payrolls report because Jeff Rosenberg of BlackRock says the numbers highlight the tension in the Federal Reserve's dual mandate.
It's a weaker report, but it's a weaker report that solidifies 25. What it really puts on the table is a Fed that gets back in motion for cutting rates. And if the economy's not falling off a cliff, that's a pretty good combination for risk assets. Bad news is good news. Next week, other data will come out, and we'll focus again on the other side, which is the inflationary side. And so this is really the tension that you see within the curve.
Joining us now is Kay Hirsch. She is U.S. CIO for JP Morgan Asset Management Global FIC, and Ian Lingman, head of U.S. REIT strategy at BMO Capital Markets. And what I thought was interesting here was when Jeff mentioned if the economy is not falling off a cliff. Kay, let me start with you. What's next for the economy? Are we thinking recession? Are we thinking stagflation? No, we're in the soft landing camp, or as we fixed income people like to say, sub-trend growth. That's to say the soft landing for equity peoples. But actually, before we step forward, may we take a step back, please? As I was walking up from our new corporate headquarters 270 this morning, I was thinking about the last time I was on this show with you, and it was 3 months ago. And you may have forgotten because you're in it every single day, every data point. But 3 months ago, when I was here, we were focused on a really hot number. It was, I think, 134,000, and that was the third consecutive, much higher than expected number. Now, subsequently, that was revised away to something like 19,000. So I don't think we should get too carried away with a specific data point. I'm more looking at what we see here is a slowing in job growth. We're not sure what the break even is to keep the unemployment rate steady, given everything that's going on. But this feels like a normal and healthy slowdown in job growth. On another level, it's not surprising because when I was here in June, we spoke about the lack of breadth in the employment growth. Those job grades were very focused on healthcare and education. Those together represent about 17% of overall.
Hey, so I'm going to pull a couple of rentals here.
Something like 200% of job growth. Interesting. So
Oh, you know what? Let me put.
Revisions that had you kind of skeptical heading into this jobs report as well. When you look at the data now, this report today, with the new head of economics and politics over at BLS, how skeptical are you of this latest trend?
Well, one observation that I'll make is that the participation rate in the survey on the establishment side was the second lowest of the year. So that means that this number is also going to be revised.
So let's go back to Facebook. This. Selling. I'm making events.
That we had a strong payrolls number and a softer ADP, and then the market would discount the BLS data even more. But now we have a clear message, and it is a message of cooling. It's not a message of contraction, at least not yet. My primary concern is there's a sentiment within firms and hiring that has swung away from adding. Now we're at stall speed, and the question is the next leg actually shedding jobs? And that's what we would get worried about a recession over some trade growth.
Well, we're not there yet.
Not yet.
Okay, I mentioned BLS because obviously that's something that caught the president's attention last time around. And Howard Lutnick, the Commerce Secretary, was speaking about the new leadership at the BLS. Let's take a listen.
Donald Trump needs to rely upon the numbers. America needs to rely upon the numbers. You can't have these bent former administration people who have a view and who want to harm the president. We need accurate numbers coming from BLS, and finally we'll have leadership to do it.
Obviously, he's speaking from the perspective of someone who is, has the ear of the president and is speaking to the president in many ways. The August jobs report was weak, the July jobs report was weak, and the president was unhappy with that. But I'm not clear why the weak print was bad when it buttresses the case for a rate cut. I mean, it gets us to where the president wants to go, doesn't it, Kate? Yes, but let's take a step back, because you've asked about the BLS, and I think it's really important to touch on that. There's these challenges to BLS credibility, but actually, if you look under the surface, since COVID, since the pandemic, the response rates have really plummeted. So what happens is you get a phone call, hi, are you employed? Or a company essentially is asked the same thing. And after the first month, and Ian, feel free to help me out, I think it's something.
Hey, what's going on?
Of people respond. Pre-pandemic, those numbers were much higher. After the second month, it's in the 80s. After the third month, it's like 95%. So those numbers are more reliable. So the question I think to ask is, instead of calling companies and individuals, is there a better way to get more real-time access to data so that we're not always revising away the data, which absolutely calls into question the credibility of the BLS, which I think is helpful to know. Ian, do you have more faith in the inflation numbers that we're going to get next week, for instance? It doesn't get revised in quite the same way that the jobs numbers do.
Well, I do have a bit more faith on the inflation side because a lot of the inputs are real time. A lot of the inputs are not survey based, i.e., we rely on someone or a firm to contribute. So there are questions about the methodology on CPI as well, but that's a separate issue. That's not a reliability of the data per se. I'm also concerned because
What am I doing here?
On Tuesday, that we have more revisions coming on the job side that I might have until now float under the radar a bit, and that could be a bigger market mover than even CPI next week.
Okay, fair enough. Before today's release of the jobs report, Stephen Englander of Standard Chartered had said that, in our view, published NFP below 40,000, which is what we got, and an unemployment rate of 4.4%, which we did not get, will make a 50 basis point cut likely. How wide open is the door to a 50 basis point cut from you?
So I'll make the observation that we were pretty close to a 4.4% unemployment rate, because on an unrounded basis, it was a high 0.3. That being said, this report, I think, locks in an October rate cut as opposed to putting 50 basis points on the table. I would take 50 basis points off the table yet because we still have CPI and we still have those BLS revisions, and we could be looking back at the reference period and conclude that in fact policy was much more restrictive at that moment than we're currently assuming it was, and we're just playing a game of catch up with the economic data as we go into the Fed on the 17th.
Kate, how fast of an easing cycle could this be?
So we're more in the soft landing camp, and they expect the Fed to cut once in September, so 25 basis points. And if we continue to get this type of economic or this type of employment number, we would expect probably 2 more cuts, so call it 75 basis points. I think employment is the number to focus on. At Jackson Hole last month, Fed Chairman Powell made very clear he's more focused on the employment side of the dual mandate than he is on the inflation side. But I would agree with Ian, we absolutely will be watching CPI next week as well.
All right, good stuff. Kay Her of JP Morgan Asset Management and Ian Lincoln of BMO Capital Markets, thank you both so much. And a programming note that Chicago Fed President Austin Goolsbee will be joining Bloomberg's Balance of Power at 1:30 p.m. New York time today. Be sure to tune in then. Up next on Real Yield, the auction block. September starts at a sizzling pace for debt sales. We're going to talk credit next. This is Real Yield on Bloomberg.
Healthcare. It's outdated and change. Gone are the days of doctors who only want to see you when you're sick. Oak Street Health focuses on keeping you healthy. Calling all dairy-free thinkers. We're Forager Project, a family-owned, organic, dairy-free creamery, forging a new path with cashews and coconuts, not a cow. Forage ahead. Cybercriminals count on chaos. Count on me to stop them fast. Partner with a global leader in data resilience and get 24/7 ransomware support from the first red flag to full recovery. Whenever the world throws at your data, it's all good.
Sandy. Oh, hey. Can your phone do that?
Bonjour, est-ce que je peux vous aider?
Sorry, I don't speak French. I'm just visiting.
Well, then welcome to Quebec's stunning landscapes. Where are you visiting from?
I'm American.
Okay. Versace, bright crystal.
Tedx Markets.
I'm Caroline Hyde,
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
I'm Scarlett Wu, and this is Bloomberg Real Yield. It is time now for the auction block, where global issuance got off to a sizzling start for the month of September. We start in Europe. Tuesday set a record for issuance in one day. Supply for the week coming in around 79 billion euros. That is the busiest stretch since mid-May. The numbers were helped by a record 10-year gilt sale in the UK. Now here in the US, it was the second most active week this year, with more than 16 $67 billion sold. Tuesday saw a record 58 bonds in the market. Big names were and over in high yield, the primary market almost $10 billion this week, including almost $5 billion on Wednesday, the busiest day in 3 months. Borrowing costs have fallen, hovering near levels last seen in 2022. Now, sticking with credit, Omar Aguilar, who's the CEO of Schwab Asset Management, says high-quality companies are pretty well positioned despite historically tight spreads.
Credit spreads have been incredibly tight, and most importantly, not only the level, but if you actually see the level of volatility of the credit market, it's actually very surprising to just see that even though we have seen all kinds of uncertainty coming from headlines and everything else, we've seen this that incredibly, well positioned for high quality companies where leverage has not been high.
Joining us now is Patrice Altanji. She is head of debt capital markets for HSBC Americas. Also with us is Matthew Mish, head of credit strategy at UBS Investment Bank. So as we kind of set it up, there's been a ton of issuance in Europe and in the US. There's a lot of supply. Patrice, let me start with you. What does demand look like right now?
Demand is still super strong. I know we've got a lot of news today out on the jobs report, but the technicals and how fixed income investors have been shaking this off has been pretty impressive. Oversubscription levels very strong in Europe. We saw a number of US issuers heading over to that market. That's been a consistent theme. In fact, almost 25% of corporate supply in Europe is from US issuers this year, and that's up about 5%. And in the US, the inflows are strong. They're strong on liquid data, they're strong on ETF fund flows, and they're strong on broad ag flows. So there's really not a bad spot in the market right now when you're thinking about different tenors.
Matthew, what do you see? Because a lot of what people are saying is that there's this rush by investors to lock in yields while they can before rates begin falling next week, as early as next week if the Fed cuts.
Yeah, I think at these spread levels you have to issue, right? And you're going to take opportunistically the chance given the amount of events this month. I think in general, from the client base, what we're hearing is I think an increased belief in a softer landing. And that really comes through, even despite the jobs data. I think people think inflation boosts nominal earnings growth. Ultimately, that you're seeing a lot of this issuance mean that credit conditions are easing in the marketplace, and default rates are still low. The latest data that we have on bankruptcy filings across the board is fairly benign. So to us, this looks like, and there's 6 periods in the past where you've had labor market data that is at or very close to kind of flatlining. And in half of those instances, credit spreads have essentially not moved. And it really has been those cases where the economic slowdown has really kind of bottomed and started to pick up. And so you've re-accelerated, and that's the expectation in the market. Or you've had credit events like 2007. And I think we see very limited signs of either of those evolving in the next few months.
Do you see any sign of complacency in where spreads are? I mean, they're pretty tight right now. Okay, I'm sorry, Misty.
No, we don't really see, it's a steady grind in. We did see spreads hit some tights before Labor Day. We saw a little bit of back off as issuers made room for the deluge that we're seeing now. But even with almost 70 billion in supply this week, we have seen those spreads start to grind in. And, cash balances, we did an investor survey very recently, and investors are reporting that they feel that they have either high or very high cash balances. Almost half of our investors are reporting that. The other half say it's very normal, and like less than 2% felt like they were at low cash balances. So people are ready to go. They've made room for the supply that's coming. I think a lot of issuers have tried to pull forward some of their supply in early in the year. We've seen the banks fund a lot. They're mostly done. A lot of the corporates have done a lot of their funding, but technicals will remain strong. So I think when we look at the rest of the year, we'll see people trying to be opportunistic, taking advantage of these windows before 2026 to start on 2026 plans. And we're also starting to see the M&A calendar pick up, and fixed income investors love helping to fund M&A transactions. They're typically very large liquid deals. It's a great place for them to participate.
Thank you, Patrice, and forgive me for butchering her name earlier. So Matthew, put that all together with the steepening yield curve and the expectation that it will continue to steepen with this idea that we're going to get more M&A, we're going to get more activity as year goes on.
Yeah, I mean, look, we generally have a view that the ranges are going to be narrow for spreads, and that interest rates are heading lower. So from a fixed income standpoint, that generates pretty good returns, almost equity-like returns for the rest of the year. So depending on the specific pocket of credit, we'd be talking high grade, high yield leveraged loans, or private credit. We're looking for a range of 2 to 3.5% total returns over the next 4 months, which on an annualized basis is 6 to 10%. I mean, that's very attractive returns. It's not without risks, but I think the two biggest risks in the market right now are, one, that the labor market deterioration actually gets worse, right? That we have to go through a period where maybe we're miscalibrating the magnitude of the slowdown. I think that can be problematic. The other thing really that people are focused on is the AI trade, and that ties in very closely with private credit. But right now our view is the cycle extends. There's a very positive technical, we think, in private credit where the inclusion of alternatives in defined contribution plans is going to help drive more flows into the market. And there's a lot of optimism in capital deployment to the point Patrice was making on the private credit side.
How does that affect what you're looking at, the private credit and the demand for those instruments? You know, we're seeing a lot of business development companies do a lot more funding into the bond markets, both in the U.S. and in euros. We had a great successful transaction there this week that Knowldge did, and was very attractive levels versus where they were in dollars. So a shout out to them on taking advantage of that opportunity. But it does flow into our market, and the investment grade markets are the most liquid in the world. So whether we think about AI needs and needs that companies will have for the future, a lot of that I think will get funded ultimately in the bond markets because it's the place where you can do 20 to 40 billion if you need to.
If you had to point to something that worries you the most right now, what would it be, given where spreads are right now? Matthew?
It really is on the private side. We wrote a note a few weeks back highlighting that there is emerging signs of deterioration in the credit quality. So it's not a public market story, it's a private market story for us.
Could that spill over?
It could, but I think our view has been very clearly it's not going to be volatility in interest rates in the medium term. It's not actually going to be economic growth unless we fall off a cliff. It really is going to be the question of whether or not the increase in default rates, which is marginal right now in that market, really picks up and accelerates. But our view is outside of an economic recession, the only other way that happens is if you look at the BDC portfolios, to Patrice's point, they're very concentrated in several sectors, two of which are tech and services. So we're watching it closely, but right now the signs are not for an acceleration in defaults. And if that's the case, you don't get a surge in cumulative default rates in that market, you're not going to see much spillover. If anything, that market will continue to be a shock absorber. So if you get public markets or confidence to fall, public market issuance tightens up, you'll see private credit step in.
Okay, that's a really good something to watch for. Patrice, what about you? What worries you the most right now?
Yeah, when we talk to investors, the top 5 things have been U.S. fiscal policy, the deficit, inflation. The usual. Geopolitical, tariffs, U.S. weakening economic conditions have been at the bottom of that. Whether today's report starts having that, come up a little bit in their concerns, maybe, but it is still a number that people are working through. Investors, it's not stopping them. Maybe they're thinking about it a little bit differently, but it hasn't slowed down the market from our perspective, but definitely something that we're watching.
Gives them something to think about, but not enough for them to pause.
Correct.
All right. Truman Show of HSBC Americas, thank you so much, along with Matthew Wish of UBS Investment Bank. And if you can't get enough talk on credit, be sure to check out the Bloomberg Credit Edge weekly podcast on the Bloomberg Terminal and wherever you get your podcasts. Still ahead on Real Yield, the final spread, the week ahead, the last full week of data before the Fed's September meeting. This is Real Yield on Bloomberg.
I want to perform at my best. That's why I only use medication that's prescribed by my doctor. This speck of dirt would be fatal if it was fentanyl. Fentanyl is a deadly opioid being added to pills disguised as other medications like Oxy, Xanax, and Adderall. It's impossible to tell the difference between a real pill and a fake pill. Don't let fentanyl steal your game.
Hempstead Town Supervisor John Ferretti and Receiver of Taxes Janine Driscoll are helping neighbors to lower their property taxes. Their taxpayer seminars show homeowners how to challenge property assessments and lower taxes. John Ferretti and Janine Driscoll are even helping neighbors is to apply for tax-reducing property exemptions, and the supervisor is producing a tax cut budget for 2026. John Ferretti invites you to scan the QR code or call us to find a taxpayer seminar near you.
That's like my new favorite.
Is this your first time trying Bones Coffee?
It is. I'm not gonna lie. That cookies and cream is something after my heart. Honestly, all the flavors are so good. That's gonna be like my new addiction. It was really good. It wasn't like thick, and it didn't leave like a weird residue in my mouth. The aftertaste seems like the chocolatey goodness with a little bit of a coffee undertone. It was the best one I've had so far.
Gonna order again?
Oh, 100%.
We have over 30 unique coffee flavors. BonesCoffee.com.
Cyber criminals count on chaos. Count on Beam to stop them fast. Partner with the global leader in data resilience to get 24/7 ransomware support. From the first red flag to full recovery. Whenever the world throws at your data, it's all good.
I'm Scarlett Fu, and this is Bloomberg Real Yield. It's time now for the final spread, a look at what's coming up in the week ahead. And on Monday, Japan and France hold confidence votes, questions about political stability, particularly in France. Also, over China, trade data is released. On Tuesday, here in the U.S., Apple holds its annual iPhone event, plus a UK bond sale, especially with a lot of bond vigilantes, being earned in the UK. And there's also earnings out of Oracle on Wednesday. We get the start of inflation data reporting with US PPI coming out. Also, Ursula von der Leyen's State of the EU Union address coming out that day. That sets us up for the ECB decision on interest rates on Thursday. That coming out at 8:15 a.m. And then US CPA data. That is a big data point for the Americas and the 9/11 memorial services. And then we cap off the week on Friday with the University of Michigan sentiment survey and inflation data out of Europe. And for my final thought, I want to take a look at CPI estimates, looking ahead to that print, because right now the consensus estimate is for a pickup on the headline number of 0.3% from the prior 0.2%. When you back out food and energy expenses, it'll stay stable at 0.3%. On a year-over-year basis, core will be 3.1%, sticking with the 3.1% prior. When you strip it all out, we're looking at inflation that is still above the Fed's 2% target. That does it from New York. Here from Real Yield, same time, same place for us next week. This is Bloomberg.
The most challenging part of working in IT at IBM is the breadth of problems. Lots of people, lots of software, lots of hardware, lots of time zones, lots of everything.
Sometimes there are tools that perform the same function. People don't know which one should I use.
Most of the time, that wasn't very helpful. Kind of treated every issue like it was the same issue. We had an article, we had a process we walk people through, we expect them to help themselves.
We saw this proliferation of tools that was overwhelming to the employees, that was overwhelming to the IT support professionals trying to give them that immediate support. We asked ourselves, what if we upended this and created a digital assistant that would do that for them? We created Ask IT, an AI assistant that's now answering 80% of IBMers' requests for IT support, from password resets to which tools do they need to access, and multilingual support running 24/7 without the need for a phone line. The next generation is moving from reactive to predictive. Imagine a situation where something's going on with the laptop, but the employee doesn't know it. Now we use real-time telemetry to predict when that failure may occur, channel that through Ask IT, ask the employee to take a preemptive action before it disrupts their work. Pressure testing and shaping the way that Ask IT operates for IBM first gives our clients the confidence that they can go on this journey as well, wherever they are.
I'm not just fixing people's problems, I'm actually building something that's worth talking about outside the company. Ask IT freed us up to do a lot more of the transformational work.
It's more satisfying because we're transforming the business.
I think that when the system's working well, you stop thinking these things as problems. They're just a thing that happens and user blows through it. It's not like a pain point anymore.
One
Spreads can order whatever she wants from the menu. The other has food allergies. You do your best to avoid food allergens, but accidents can still happen. Xolair is an FDA-approved injection proven to significantly reduce allergic reactions from accidental food exposures. Taken once or twice a month, it focuses on the source of food allergy reactions. For adults and children as young as 1, Xolair is effective in reducing allergic reactions to a single or multiple foods.
Don't use if you are allergic to Xolair. Xolair may cause a severe life-threatening allergic reaction called anaphylaxis. Tell your doctor if you ever had anaphylaxis. Get help right away if you have trouble breathing or if you have swelling in your throat or tongue. Xolair should not be used for the emergency treatment of allergic reactions, including anaphylaxis. Xolair is great to use to reduce allergic reactions, including anaphylaxis, while avoiding food allergens. Serious side effects such as cancer, fever, muscle aches, rash, parasitic infection, or heart and circulation problems have been reported.
Help reduce food allergy reactions if an accident happens. Ask an allergist about Xolair.
Welcome to Bloomberg Markets. I'm Scarlett Fu. Let's show you what's happening on this Jobs Friday. We had an equity market that was slated to open higher, at least judging by the pre-market trade, and it did initially, which would have been a new record high, except that it gave up its gains and it is now down 0.5%, as you can see there. So retreating from that record high. Treasuries are rallying big time, sending yields sharply lower. You can see the 2-year yield down 11 basis points, the 10-year yield off by 9 basis points, and crude oil tumbling, now lower by more than 3% before this weekend's OPEC Plus meeting. Bloomberg is reporting that Saudi Arabia wants the group to boost oil production. Let's go back to equities and highlight a couple of individual movers, and Bloomberg's Natalia Knowldge joins us now with more. Natalia.
Hi, Scarlett. First, let's take a look at shares of Lululemon. They are down by 18%, one of the lowest levels since early 2020. The company cut its earnings guidance for the full year and said it would take about $240 million hit from tariffs and President Donald Trump's decision to end the de minimis exemption. At least 5 analysts downgraded the stock today. Then in the technology space, I'm watching Broadcom. Shares are up by 9.5% today. Sources told Bloomberg that it will be helping OpenAI to design and produce an artificial intelligence accelerator from 2026. The company said its artificial intelligence outlook will improve significantly in the fiscal 2026. And then finally, shares of DocuSign are up today by 5.3%. The second quarter results meet expectations, and the company also raised full year forecast. To Bloomberg Intelligence, however, this billing guidance seems conservative, Scarlett.
All right, thank you so much, Bloomberg's Natalia Knowldge with our individual equity movers. Well, we got the highly anticipated jobs report this morning. Non-farm payrolls missed significantly, showing an increasingly stagnant job market, an increase of only 22,000. Investors were waiting to see how this would factor in the Fed's decision-making for the rest of the year. Here is some of the reaction that we saw to that report on Bloomberg TV today.
We're going to see tariffs push up inflation. We're seeing all of this take a toll on job growth. This is an economy that's being pushed to the edge.
What it really puts on the table is a Fed that gets back in motion for cutting rates. And if the economy's not falling off a cliff, that's a pretty good combination for risk assets.
The markets are quickly moving from pricing in 2 cuts for the rest of this year, meaning 1 in 12 days and 1 in December, to possibly a cut at all 3 meetings.
All right, we're going to help get some help breaking down the numbers with Molly Smith, who covers economics and central banks for Bloomberg News. But Molly, I just want to first mention a couple of headlines coming out from Scott Bessent, the Treasury Secretary. He's written an opinion piece in the Wall Street Journal, basically calling for more of an independent review of the Federal Reserve, criticizing the central bank for what he calls mission creep, and talking about how the Fed's expansion beyond its dual mandate of managing inflation and maximizing employment has jeopardized its credibility. What's the backstory here for his latest hit against the Federal Reserve?
I think this really just falls into the broader context of the Trump administration's attacks on the central bank, and especially coming from Bessent right now, who's the Treasury Secretary, and usually a role that you try to distance yourself a bit from the Fed. Of course, Scott Bessent's name was on that short list for a time of who might succeed Chair Jerome Powell, as the Trump administration has expanded that search of names quite a bit for that term that's coming up at the end of May next year. So, I mean, I think this is really, again, it's consistent with a lot of what the administration has said in coming after the Fed. Of course, we saw Trump after the jobs report today, again calling on Powell, again saying he's too late in cutting interest rates. So the irony, of course, is that we probably are going to get a Fed rate cut at this next meeting. And who knows, whether Steve Myron, who had his confirmation yesterday, that hearing rather, if he's going to be in the meeting in time for that or not. But yeah, in one way or another, 25 or 50 September. What the expectation is at least. So I think if anything, we're probably looking at 25 right now. CPI and PPI next week are going to alter the course for September, but the remaining two meetings may be a bit more of a toss-up depending how the rest of the inflation and employment data play out.
All right, good stuff. Molly, always a pleasure speaking with you. Molly Smith, who covers economics for us here at Bloomberg News. Now, we've just heard how markets are reacting to today's jobs data, but what's not in those headlines is perhaps just as telling, especially when it comes to who is entering or leaving the labor force. A recent analysis shows that mothers of young kids are vanishing from the workforce, at least recently. Joining us now is Tedx Talk, who conducted the research. She's the associate professor of economics at the University of Kansas, and she's also the author of the upcoming book, Swiftonomics: How Women Mastermind and Redefine Our Economy. Missy, thank you so much for joining us today.
Yeah, thanks for having me.
So you track something that you call girly statistics, which basically is unpaid labor from the home that is not captured in official statistics. You can slice and dice those kinds of numbers any number of ways, but what does it include overall?
Yeah, so girly statistics are really thinking about the type of economic activity that is generally done by women and often ignored by society, and particularly ignored within economic statistics. So it's looking at all of the, meals that are made, all of the childcare provided by caregivers who predominantly are women.
So what do the girly statistics show with regard to the strength or weakness of the labor market compared with the official data?
Yeah, so, one thing that I will point out is the analysis that I've done in the first half of 2025 looks at mothers' labor force participation, so moms working in paid labor, and there's actually been a pretty stark decrease in the first half of 2025. Between January and June, there was a 3 percentage point drop in labor force participation of mothers of small children under the age of 5. And so, when we look at the broader numbers of what's going on with women's labor force participation, often we don't see what's going on in the underbelly and some of the vulnerable populations and those populations.
So what does this tell you about the state of our labor market and women's role in the labor market right now?
Yeah, I think it's really a canary in the coal mine type of scenario. Generally, if I'm wanting to look at what's going to happen in the future as we move on with the labor market, I want to look at what's going on with some of the most vulnerable populations who are kind of the first out, last in. When we're thinking about the strength of the labor market, that tends to be, again, caregivers of small children, mothers of small children. Often I'll look to labor force participation of Black women as well. I think those are good indicators as to what the health of the labor market in general.
Where do you get your raw data on girly statistics? How do you put those numbers together?
Yeah, so we, all this data is available on our dashboard. It's called thecareboard.org. But what we do is we take the current population survey microdata, and we take the American Time Use Survey microdata. So Time Use Survey measures how much time is spent in non-paid activities, and we blend those two together to get a better overarching picture of what's going on in the economy as it relates to care activities.
Do you get much by the way of private data? I mean, are companies, employers making available data to hires like you to be able to put together this picture?
Yeah, so we are starting to have some conversations with some companies getting access to data, especially when thinking about the public
Taylor Swift, whether it's Beyonce, whether it's Rihanna?
Yeah. Well, I think the first place to start is just to understand that women's educational attainment has really increased a lot over the past few decades, especially over the past century. And that increase in educational attainment of women has really afforded them a lot more leverage within the labor market, a lot more leverage in industries that have been predominantly male or relatively misogynistic in nature, such as the entertainment industry. And it's not only that women are coming up with higher levels of education and more power and influence, but so are their friends and colleagues. And so you've got groups of women who have access to money, access to resources, who are really influencing and pushing against the grain in society today in terms of just the traditional ways that we typically think of ourselves and the opportunities that we have.
So we talked earlier about unpaid labor inside the house, how that's not captured in the official statistics. Are the contributions, economic contributions of women in the pop culture space, is that captured in official data?
It's captured in official data to the extent that their job activity is captured in the official data. And so in that sense, yes. But, you think about Taylor Swift, who has a new album coming out where, her album is representative of kind of her showgirl status. If you think about it, showgirls were like one of the first paid jobs available to women, way back when. And her album really is focused on telling the other side of the story of what it's like to be a showgirl, telling the story that, again, isn't captured in official data and statistics, the story of how women recover in these jobs, what that recovery looks like. And I think these are important stories for us to tell, especially as women. We often can be seen as having a disadvantage in thriving. And so the more we can tell these stories, the more we can provide data to tell these stories, the better off we'll all be.
Yeah, another story on that is The Last Showgirl with Pamela Anderson, which I saw, which was really interesting.
Yes.
Misty, thank you so much. Misty Hageness is Associate Professor of Public Affairs and Economics at the University of Kansas and upcoming author of the upcoming book, Swift Development. Coming up, shares.com soaring after reports is building custom AI chips for OpenAI. Where does that leave NVIDIA? We're going to break down what it means for the AI arms race next. This is Bloomberg.
You certain this is decaf? Wait for it, for certain. I'm like, wait,
Certainty matters. So when you need the right high-quality promotional products, printed perfectly and guaranteed to arrive on time, that's the certainty of 4imprint. Wow your clients, nail your next event, or inspire your team by visiting 4imprint.com. 4imprint, 413.
Hey, this is Skula. Guess where I am standing right now? With our apple farmer Steve. Steve's a fifth-generation local farmer, good family friend. Skula has 10 varieties of apples, including local honey, Gala, Macintosh, and Mac. And taste their Skula apple cider with their fresh-made apple cider donuts. That'll make your eyeballs water. Come visit Skula. I'll see you in the store.
Cybercriminals count on chaos. Count on being to stop them. Partner with the global leader in data resilience to get 24/7 ransomware support. From the first red flag to full recovery. Whatever the world throws at your data, it's all good.
At New York Cancer and Blood Specialists, our mission is simple: deliver high quality